Hey guys, I hope you're having a great weekend. Today we'll be taking over a few chart analysis. I'm going to try as much as possible to go as fast as I can just to keep this video short. So remember guys, this is solely my opinion. Everything I teach in this video isn't a fixed prediction saying this is exactly what's going to happen. But it's just my opinion, my thoughts about the forex markets for this coming week. So I hope this helps you get some spotlight on some of the currency pairs you can be trading this week, and I hope it helps. So as usual, I'll be starting with gold. Before we get started, if you love the content, please leave a like, subscribe, share with friends, and check out our Instagram pages. We've got lots of great content over there. So this is a gold chart, 1 day chart. As you can see, we are clearly in a downtrend. Okay, we are still within our flag, our channel, as we indicated last week. So we had a reversal at the end of last week. So Wednesday, Thursday, Friday. So we had some bullish reversal on across all major currency pairs, including gold. So this reversal probably took us back to retest our broken weekly support level. So you remember last week we broke our weekly support level, and now it seems we've gone back to retest that level. So if we were to draw a line, that weekly support level is going to be around this price, and as you can see, we had our reversal directly touching this weekly support level. So in this week's analysis, we're going to be making use of the Fibonacci retracement tool a lot. So just in case you see so many Fibonacci retracements tool being used in this video, you'll understand why we're using them. So let's go down to the lower time frames. So before we go down to the lower time frame, I'm just going to show you some of my targets for long term. Okay, so I'm going to go to the weekly time frame first. So as you can see here, we've got this weekly support level. So you can see gold has bounced off this weekly support level multiple times. So we have one here in 2008 of October, we have another one here in 2015, another one here in 2018, and there's a very good chance if these if we have a follow through with this bearish movement and this the break of this weekly support level, we might be heading down to this weekly support level. And if we should move down relative to time over the long time, we might touch this support level or this trend line the moment we get to this support level. So remember I told you, if we break the weekly support level, this is our next target. So it depends on how we move, how fast we move down. So this might trend downward over time to touch this weekly trend line, and which will also align with this weekly support level as indicated in our previous videos. So that's just what I want to quickly share with you in the long term. So for the short term, let's see if we've got good trade opportunities for this coming week. So looking down on the 1 day time frame, bear with me, we've got a lot of lines on the chart. So this is our channel on the daily time frame, and this is our support level. So this is an important area of value where we could see some price retracement, where we'll grab some liquidity before going downward in continuation of the trend. So like I said earlier, we're using a lot of Fibonacci retracement too, but before we pull one out, let me just quickly explain what happened. So we had this break of this weekly support level, support level. Yes, we had a consolidation, a breakout, and we had a slight support level here. So we had a retest, reversal, and a break of that level, and a failure to follow through, creating this double top. So now we have a rising wedge which has a breakout now, and this price closed on Friday at this level. So we might see a follow through, okay, with this breakout. So we might see price coming down. We might see price coming down next week with maybe slight consolidations along the way, but I'm not sure about that yet. So the reason why I'm picking this as a significant area or as a significant opportunity to open trade is because if you pull up your 5-2 and you take the highs there to the lows, you'll find that we just touched the 50% Fibonacci retracement level, okay? And the 50% Fibonacci retracement level is a very important retracement level on the 5-2. So this is clearly a downtrend. So if you pick out this level, you see we had a reversal. So we have some sort of double top here. So I'm going to zoom in a little. So we have some sort of double top here, and our rising wedge, it's kind of like forming a bearish divergence. Okay, so I'm just going to show you what I mean. So as you can see on the RSI, we have price, building bearish strength, okay, bearish momentum. So we have bearish momentum on our RSI, where we had bullish momentum on the price. So this is clearly a bearish divergence, okay. So we might see some price follow through. So if we were to open a trade here, so our first target will be this level. So if we get a consolidation at this level, then we could see another break downward. But there's also a probability that we might see price reversal, okay. We might see price consolidating a little at this level and then reversing upward to hit the 61% Fibonacci retracement level, which is also a stronger level. So this is a two-edged sword. So if you'll be trading this breakout next week, you should be careful, trade with low risk. And if you open a trade, first target should be here, get that bearish continuation or consolidation pattern. Then on that breakout, you go short again. But also, put in your mind, set it in your mind that there's also a probability that we might see a reversal to the 61.8 Fibonacci retracement level, which is a much more significant level than the 50% Fibonacci retracement level. And the 61.8 Fibonacci retracement level would give us a spike, or will give us price movements going back into this area of value. So give me a minute, please. So into this area of value, I'm going to go down to the 2 hours time frame so we can see clearly what I'm talking about. So looking at this support level, so if we fail to get a follow through with this with the break of this rising wedge, we might see a reversal back into this support level, which closely or perfectly aligns with the 61% Fibonacci retracement level. So this would be another area for me to open a short position, and I'm not going to wait for a reversal. So if we should get into these price levels, I'm just going to take a short position. But tomorrow I'm going to see how the market opens. If it's so weak, if there's a sign of a bearish breakout from this level, then I'm going to go short, targeting these lower levels. I'm scaling out my positions as we move downward, but there's also a probability that we might go to the 61.8% level. So this is something to keep in mind in gold. And I think as we move on, we are going to eventually hit the bottom of this daily channel. But the most important thing is to pick out our trade entry precisely in order for us to take advantage of this price movement. So if you take a look at the 50% 5 level on the 2 hours time frame, you can see it also closely aligns with this resistance level here on this consolidation. So that's why this is potentially a good area for a reversal in continuation of this downtrend. But bear in mind, we could have a reversal back to the 61.8% Fibonacci retracement level. So that's it for gold. I'm going to move on to EUR-USD. So EUR-USD, real quick, we are still within our bearish channel. We had a very nice bounce off the bottom of the channel, and we've been following this for weeks now, for months. So I'm going to go down to the lower time frame, so 2 hours time frame. So there's two things that could happen here, okay, similar to gold. So two things I'm going to be paying attention to as we start the new week, okay. So first of all, there's a very good chance we are going to get a consolidation and head higher to the top of this channel, and then a reversal, okay. There's also a good chance we might get a consolidation and a bearish breakout. So if gold is to make a bullish move back to the 61.8% level, so if gold is to make a move from here up to the 61% level, I think that will give EUR-USD a good chance to also get a bullish move back to the top of this channel, which will give us a really good opportunity to open a sell position. So for EUR-USD, I'm not going to be going short right now. I'm just going to wait for this bullish consolidation to give me the signal to go long, okay. So if I don't get this bullish consolidation and a breakout, so something like this, so if I don't get a bullish consolidation and a bullish breakout to go long, I'm going to stay away from EUR-USD. But if we get a very good consolidation and a breakout for EUR-USD, or for gold, excuse me, I'm also not going to go short on EUR-USD because right now I cannot see a pattern to go short for EUR-USD, and clearly we are at the middle of this channel on EUR-USD, so it's not logical for me to go short, but instead look for opportunities to go long in order to target the top of this channel. But who knows, maybe within a week we're going to get a pattern that gives us the opportunity to go short. But until then, I'm going to stay away from short positions on EUR-USD. Maybe we might get something like this, creating a very good support level, which will get a breakout, and that could be our opportunity to go short. So something like this will be a reasonable, price entry to go short if this happens. So I doubt this is going to happen, but we might get, straight, price movement like this. We might not get a consolidation. So that's the reason why I said I won't be going short on areas, because if we get a sharp dump from this level, there's no way you're going to get a good entry. So it's best to just, stay away from the market and let the market do its thing. So I'd rather trade gold, because if we go short, I already have multiple reasons to go short on gold. And for areas, if you pull up the Fibonacci retracement tool, you would find out that we kind of went towards the 50% Fibonacci retracement level, but this Fibonacci retracement level is way, off the top of this channel. So there's still a lot of room for price to, run, even if you were to take a shot at this 50% Fibonacci retracement level. So there's just too much risk on this, because there's a very big open space here with no clear, solid area of value holding price, except maybe we get into this 61.8% fab level. So I'm just going to show you what I'm talking about, except maybe we get down here. So if we come into this level, so this could be our significant area of value, okay, and this aligns with the 61.8% fab level. So going for a short here means you'll be exposed to stop loss is what, let's see. So if you take a short around this level, so you're going to be exposed to stop loss that's as high as 200 pips, because this is just the next area of value, okay, significant area of value to watch out for. So I'm not going to be going short on gold or on EUR-USD. I'm just going to wait for a consolidation like this, a bullish breakout to target this area of value or the top of this channel. So it depends on how fast it happens. So that's it for EUR-USD. So I'm going to be watching EUR-USD, gold, GBP USD closely in order to determine the best possible trade entries. So moving on, GBP USD. So this is a very complicated chart. You see, last week we had this massive flush, okay, this within last 2 weeks we had this massive flush downwards, and this made a major negative impact on the Great British Pounds against the US dollar. But now we seem to be gearing for a bullish move, but I think this would be short-lived, because there's still so much bearish pressure in the market and the dollar is still very strong. Although the dollar has retraced a little bit. I want to take a look at the DXY before we round up this video. So for GBP USD, we can see we had this breakout. So remember, this lows here is our long-term low from 1985. So this is a very significant low. So we had a bullish move and a break of this level. So as you can see, pulling up the Fibonacci retracement tool, we had price reverse from the 61.8% Fibonacci retracement level, which is a significant level as well, okay, and it aligns with this support level and consolidation around this level, which is also a good area of value to grab liquidity, which we did, and we had a reversal, okay. But right now there's two things that's likely to happen. We could consolidate a little and continue the bearish trend, because remember, looking at the higher time frame, GBP USD is still in a macro bearish trend. So I'm just going to show you real quick. So 6 hours chart, for example, we have a bearish trend. So this is a bearish trend for GBP USD. So this trend could continue, or this could be the end of the bearish trend for GBP USD, but I doubt that, because the banks in Britain right now, they are undergoing some sort of quantitative easing, printing out more money, when in fact they should be tightening. They are increasing interest rates, or tightening their monetary policy, which they are doing, of course, at the same time printing more money. So that's going to affect the pounds a great deal, okay, as we move forward with the year, okay. So this is a scenario that could play out, but for me to go long, since we are clearly bullish right now, but until we break the 61% Fibonacci retracement level, I won't be excited yet, because this is still a lower low compared this is still a lower high compared to these highs, okay. So if we should get something like this, so if we should get a consolidation like this within the 50% and the 51% Fibonacci retracement level, and then a bullish breakout, then I'm going to consider going short, okay. Just a low risk trade, nothing serious, because these uncharted territories here. So I'm going to watch out for something like this, a breakout, for me to go long. And of course, I'm going to also watch out what gold does, okay, because gold areas, GBP, they move alike, okay. So they move closely, in close proximity to the DXY. So they are negatively correlated to the DXY. So if the dollar is strong, these three assets will be weak, and if dollar is weak, they're going to be strong. So that's what we can see right now over the past 6 months or 1 year. So I'm going to wait for something like this to go long. As for to go short, I don't know yet, because I clearly can't see any good opportunity to go short. Okay, so maybe tomorrow we might get a pattern like this, and a break of the support level of this consolidation would be a good opportunity to go short. But clearly, I don't think that's going to happen. But if it happens, I'm going to trade accordingly. But whatever trade I'm taking on GBP USD, EUR-USD, I'm just going to go in at a very low risk. Okay, very low risk. I'm going to watch out what the DXY does in order for me to make these decisions. So moving on, USD JPY. This is very, very interesting. Okay, remember, USD JPY has been a massive bullish trend, but right now we seem to be consolidating close to this resistance level. I know we had this fake out here, but I'm going to neglect this, okay, because this happened based on fundamentals, okay, and it was short-lived. So I'm going to neglect this, pretend as if this didn't happen. Okay, so if you pretend as if this didn't happen, we have a clear area of resistance. It doesn't matter. Okay, so we have a clear area of resistance. We have one reversal, two, and we've had multiple price reversals at this level, and we have a very good build up and consolidation around these levels. So there's a very good chance we are going to see a breakout to the upside on USD JPY, and if we do, I'm going to go long on this. So something I'm going to watch out for is, if the US dollar is the major mover of this pair, then that will mean if USD JPY is going up, then it's going to mean GBP USD is going to go down, EUR-USD is going to go down or bearish, and gold is going to go bearish. So USD JPY is going to be one of my major indicators for this week. Okay, it's going to be one of my major indicators to go long or short on other major currency pairs and gold this week, because it's greatly propelled by the strength of the US dollar. But if the Japanese yen is what moves this currency pair and causes a breakout, then I'm going to watch GBP USD, EUR-USD, and gold more closely. But if the US dollar is a major mover, then I'm going to track the other currency pairs with the movement on USD JPY. So this is going to be a no-brainer. If we get a breakout, I'm going to go long, and I'm just going to ride the trend as we move higher. But my stop loss is going to be around these levels. Okay, it's going to be below these lows, and take profit. I'm just going to follow up with my trade and scale out of my positions as we move higher. So for you, if you need more confirmation, you could wait for a breakout, a retest before going long. You could wait for something like a bullish consolidation. So I'm just going to show you what I mean right now. So you could wait for something like this, a breakout, a consolidation, another breakout before you go long. But you could also wait for a breakout, a retest, and a bullish reversal before you go in. But for me, I'm not going to wait for any of those. I'm going to enter at the sign of a massive or a good breakout. Okay, because you can see the build up to this resistance level is so strong. So we had a massive flush down to this level. We had a slow grind up to the resistance level. So we had price making higher lows. Okay, one, a higher low, another higher low. So this is probably going to go on for a day or two, and we're going to see that massive breakout, which would send price higher, and I'm going to enter straight in. My stop loss is going to be here. I'm going to use a very low risk first, and if we get a reversal or a retest and a bullish reversal, then I'm going to go in hard. But if we just get a breakout at first, I'm going to go in short. I'm going to go in with a very small position, and if we get a retest, a bullish reversal to confirm the bullish breakout, then I'm going to open more positions. So that's for USD JPY. Moving on, before we move on, I'm not thinking about going short for USD JPY. Okay, I'm not going to go short. I know most people want to go short like this, so you would likely want to go short if we break this trend. But in my opinion, I don't think I will be doing that, because this is clearly a bullish trend, and we've been having this bullish build up. So this is kind of like an ascending triangle. Okay, so it validates the fact that the bulls are building momentum. So I'm just going to wait for the bullish breakouts to trade in line with the momentum and in line with the trend. So for a breakout to the downside, I'm not going to go in, because those breakouts could be short-lived. Okay, So there's just enough room here, but it seems like a good trade for on a bearish breakout, but it could be a bearish trap. So I will be staying away from a bearish breakout, and I'm going to look forward to a bullish breakout to trade USD JPY. So moving on, Nasdaq, very interesting. This is a daily chart. We are seeing a massive downtrend. As you can see, on Friday, Nasdaq made a lower low. Okay, so we've broken the previous low in June, and we've made a lower low. I'm just going to go down to the lower time frame to see what we have down here. So remember, we're in the fourth quarter of the week, so expect most of the companies to release their earnings reports, which could be bad for the markets because there's been there's been an increase in interest rates and this fear of a recession, and so we've been seeing job layoff over the past few weeks now. So the earnings reports for most of the companies in the US might not be as strong as investors expect, and this could lead to downward pressure across all major indices. So for Nasdaq, this is what I'm going to be watching out for. So we've had this breakout, so I'm just going to watch out for a consolidation like this and a breakout in continuation of this trend. Okay, so if we get something like this and a breakout, this is what I'm going to watch out for in order to go short for Nasdaq. Remember, we just put in a lower low to signify that we could be going lower. So this is what I'm going to be watching out for in order to go short for Nasdaq. So this is the same for US 30, so the Dow Jones, S&P 500. This is basically the same. All those indices has already put in a lower low already. Okay, so all you have to do is watch out for a bearish continuation pattern like this and trade accordingly. Low risk, guys, because these markets, you just never know what's going to happen. So this is what I'm going to be watching out for Nasdaq. Moving on, US oil. So this is crude oil. Very interesting chart. On a 4-hour time frame, we're in a downtrend. We've been in a downtrend. Okay, so right from these highs here. So these highs were in June this year. So we've been in this massive bearish trend. So I'm going to go back to the 1-hour time frame. So on the 1-hour time frame, we can see this slow grind here. So please forgive me for the many lines we have on the chart. I'm just going to explain why we have those lines. Okay, so something I'm going to explain before we move forward is I'm going to pull up the Fibonacci retracement tool, and I'm going to take price range from this high, because this is the last high we are touching the trend line, and these lows. So something interesting you will see is that we've got price bouncing off this 50% Fibonacci retracement level. Okay, so we had price bounce off the 50% Fibonacci retracement level. That was one. It also aligns with the trend we have here, coming from this high here. So we have one. So we have one touch, two. This was close, but I'm not going to count this. And we have three now, then four. So this is clearly showing us that there's bearish pressure mounting up on the US oil. Okay, that's crude oil. So you can see multiple reversals at this level. We can see the trend line aligns with the 50% Fibonacci retracement level. And if you take a look at this trend line we have here, price also aligns with the trend line. So we have multiple confluence here showing us that there is a bearish pressure brewing at this level. So which was why I opened a sell trade. And to add to this, this is some sort of a bearish divergence. Okay, so I'm going to show you what I mean. So I'm going to remove the Fibonacci retracement tool for a minute. So if you take a look at this high here, so we have this high, and on the RSI we had price building some bearish momentum. So I'm going to get rid of this. So you can see we had bullish momentum here and bearish momentum on the RSI. So this is clearly a bearish divergence in line with a retest of this our support trend, and in line with a 50% Fibonacci retracement level, and in line with this resistance trend going across the highs of this price movement or this price action. So this is just a no-brainer, and this is the reason why I went short at this level. So a good opportunity to go short would have been trading the break of the support level. Okay, then stop loss will be above this high. So right now we are sitting on a mini or a small resistance level. Okay, so we had a few reversals from this level, and we had a breakout, a small consolidation. Now we are kind of like consolidating around those levels. So to go short for crude oil, I'm just going to wait. That's for those who are not in yet. So I'm just going to wait for something like this some sort of consolidation, then a break of those consolidation for me to go short, targeting these lows. Okay, so you might not want to put your take profit here because any reversals could happen anytime. So your stop loss, sorry, your take profit could be around this level. So that would be approximately approximately 300 pips, and your stop loss is going to be around 300 pips approximately too. So at these highs, yeah, but it depends. Okay, so the reason why I wait for consolidation is because they give us a better risk to reward ratio. So if you get a consolidation like this before the breakout, then if you open your trade at the breakout, then your stop loss can be at the top of the consolidation. So if you open a trade at the breakout here, your stop loss can be just at these highs here at 100 pips or 150 pips, while your take profits could be at this lows here of 300 pips or way down here at 500 pips. So it's up to you with your risk management and your how you open trades. But this is how I trade. So that's it, guys, for these. Okay, before we round up, let me take a quick look at DXY. So we had some bearish momentum on DXY. That's why we had those bullish moves for the major currency pairs. So this is the 1 hour chart on DXY. So you can see from the high here, we had this bearish move down here. So that's why we had this bullish rally for GBP USD. We also had this bullish rally for EUR-USD, and we had this bullish rally for gold. So it was as a result of the weakness in the dollar. Okay, something significant also is that the USD JPY seems to not move in line with that, because if the DXY is weak, it means the USD JPY is going to be strong. Okay, so right now, sorry, if the if the DXY is weak, it means the USD JPY has to be weak. Sorry, but we can see that there's bullish momentum mounting up on USD JPY, which makes me believe that the Japanese yen might actually be the mover of the USD JPY next week. So that's something very important to watch out for. So this is just something I felt it's important to show you. So this is the DXY. So something to watch out for is if we get a break from this level, then we could be heading lower for the DXY, which means the gold, EUR-USD, GBP USD might be heading higher, okay, and USD JPY might go down. So it depends on what the DXY does next week. So that's it, guys, for this week's analysis. Remember, these are just my opinions. It's in no way predicting certainties in the market. If you love the content, don't forget to like, subscribe, and follow us on Instagram. See you next week.